Welcome to PyUncut, where we decode the future of investing one megatrend at a time. Today, we're diving into a sector that's been quietly powering both data and dreams, nuclear energy. With artificial intelligence devouring electricity faster than ever before, power demand is expected to soar by 165% by 2030, according to Goldman Sachs. Solar and wind are expanding, but they're not enough. The grid needs something stronger, steadier, and that's where nuclear re-enters the spotlight. Two names stand at the crossroads of this atomic revival, Cameco and Oklo. Both are nuclear stories, but they live in different centuries. One is a uranium titan, the other a Silicon Valley-style nuclear startup. So, which is the better buy today? Let's break it down. The shared nuclear dream. Cameco and Oklo share a common goal, a low-carbon, high-output world powered by the atom. Both benefit from the renewed global push toward clean baseload energy and the realization that without nuclear, net zero targets may remain fantasy. But that's where their similarities end. Cameco is the old guard, a global supplier with decades of infrastructure and cash flow. Oklo is the new disruptor, betting on futuristic, small-scale nuclear reactors that could power data centers, remote bases, or even entire communities. Cameco, the uranium powerhouse. Cameco isn't just a mining company. It's the backbone of nuclear fuel supply. It controls some of the world's richest uranium deposits and processes more uranium than any other commercial player. Uranium segment. Cameco's uranium division handles everything from exploration to milling. It owns majority stakes in legendary mines like McArthur River and Key Lake, the world's largest high-grade uranium mine and mill. It also holds key positions in Cigar Lake and JV Inkai in Kazakhstan, giving it geopolitical diversification in supply. Fuel services. The company runs the Blind River Refinery, the world's largest commercial uranium refinery, and the Port Hope Conversion Facility, Canada's only uranium conversion site. Downstream integration. In 2023, Cameco joined forces with Brookfield Renewable Partners to acquire a 49% stake in Westinghouse Electric Company, the historic reactor maker. This move transforms Cameco from a supplier into a vertically integrated nuclear solutions company, able to capture profits from mining all the way to maintenance. For investors, this diversification is crucial. Uranium prices fluctuate, but Westinghouse brings service revenue and long-term contracts. Cameco's story is all about scale, credibility, and leverage to the global uranium cycle. Oklo, the startup that wants to reinvent nuclear. Founded in 2013, Oklo is everything Cameco is not. Small, experimental, and unprofitable for now. Its vision, to build the Aurora Powerhouse, a next-generation modular nuclear reactor that looks more like an AI server rack than a cooling tower. The Aurora is designed to produce 15 to 75 megawatts of electricity, enough to power a small city or a hyperscale data center. The design uses liquid metal-cooled fast reactor technology, a proven but long-dormant system that recycles spent fuel and drastically reduces waste. If it works, Oklo could change how the world thinks about nuclear. Small enough to deploy in remote areas, scalable for industrial or military use, reliable as a 24/7 baseload power source for the AI era. But here's the catch. It hasn't built anything yet. Oklo reported a $45.9 million operating loss in the first half of 2025 and expects $65 to $80 million in total cash burn for the year. It plans to launch its first operational reactor around 2027-2028, marking the beginning of its commercial phase. Until then, it's a story stock, driven by vision, not earnings. Market performance. Speculation versus stability. Both stocks have had a stellar run, but for very different reasons. Cameco, CCJ, is up 68% year over year. It's a profitable, established company, trading at 77 times current earnings and 58 times forward EPS. Pricey, but backed by fundamentals. Oklo has rocketed over 1,100% in the past year. It's valued near $25 billion despite being pre-revenue. That's a valuation that assumes perfection and zero delays. Investors love the dream, but the risk is real. One licensing setback or technical issue could vaporize that optimism fast. The bigger picture: AI, energy, and the nuclear revival. The world's hunger for energy isn't slowing down, especially with AI's exponential compute growth. Data centers are projected to double their power use by the end of the decade. That's why governments from the US to South Korea to France are re-embracing nuclear as essential infrastructure. In this landscape, uranium is gold, and companies like Cameco are the miners of the digital age. Oklo represents the dream, the sleek, scalable nuclear future we hope arrives soon. But until that dream is realized, the atom's old guard still leads the charge.